Oh man, this is an emergency video because Bitcoin is forming a technical pattern which it has never formed before. This is a hugely bullish technical analysis pattern which, when it does play out on other asset classes, leads to a powerful move to the upside. I'm going to explain this golden cross and whether we should be bullish on this or whether it's overplayed. Smash up the likes. Don't forget to subscribe. As always, check out the links in the description to our Telegram community where we're actively trading the markets. That's where you're going to get all the game, all the alpha, all the insights in between these videos, so make sure you're in there. Now, as you can see, I'm sat here on a weekly chart here on Bitcoin, and what I'm showing you right now is what is known as a golden cross. This is when you have two moving averages, the 200 and the 50 moving average, crossing over. But in this case, this is not the death cross. The opposite would be the death cross. This is the golden cross. The golden cross is where the shorter term moving average, the 50-term moving average, crosses above and up over the longer term 200-week moving average, and we're seeing that play out right here on Bitcoin. Now, if we go back historically, and again, this is a weekly chart, so I'm going back a long time ago. You can see kind of got close here where they nearly touched, but these lines never touched since the beginning of Bitcoin. This is a hugely bullish indicator, not because we've got history from Bitcoin, but because this is a known technical analysis pattern which statistically does provide more bias to the upside. Now, like I said in yesterday's video, anybody who jumps on a YouTube video and says, I know exactly which direction Bitcoin is heading in, is cap. This is a game of probabilities. Anybody who's being honest with you about trading or investing will explain to you very clearly that this is a game of stacking the cards in your favor, as I always say, going with the most probabilistic likelihood. Right? That's what you're doing here. I studied maths. This is something that's very innate to me, but I know it's not common sense for a lot of people to sway in the direction of probabilities. So I wanted to show you this. This was a backtest study done on the S&P using the moving average crossover. And I want to show you the results. I'm going to save you the whole exercise. You can go and see the exact thing that they did, but I want to show you some of the headlines. Okay? So if you started with $100,000 and ended up with 5.6 million 60 years later using just backtesting strategy. But look at this. They backtested 32 trades since 1960 on the S&P. Okay, now the average gain per trade was 15.4%. 78% of the trades are winners. 78% of the trades are winners. And this is the key bit here. What this is saying is that statistically, 78% of the time, a golden cross has led to price action moving in medium to long term to the upside. And that's why this is super important. The golden cross strategy has substantially lower drawdowns than buy and hold, with only a 33% drawdown versus buy and hold's 56%. That's referring to this bit, which is the max drawdown. The max negative move they saw was 33% when they were trading on the golden crosses. So this is another study which you guys can look at. You can study this and Google it and have a good study of this. But in essence, we're looking at a bullish pattern. And the long and short of it is, we've behaved really well here on Bitcoin. It kind of moved, it retested. Oops, you're going to get all my messy lines again. Let me just clear those off for you. It retested into the 200 EMA. It went up, retested into the 200 EMA, moved. So now what I'm saying is, don't be surprised to see it want to come and gravitate in this area, right? It may want to come and touch these EMA ribbons and use them as support, but still, we know that that's an area of support. This is the area 31 to 32. These two peaks here, which I'm pointing out to you, which we struggled to break through. It took us a little bit of time to break through those levels. So now that we've gone through, I don't mind if it wants to come and backtest it. In the long run, this will be fantastic. If Bitcoin wants to come here, spend a couple of weeks coming in this direction, bouncing, and then going and creating a high mountain attack at 69,000, great. That gives it really good longevity. The problem is that's not guaranteed. When the hype and the FOMO comes into Bitcoin, sometimes it will just do irrational things and move to the upside. Let's take a look at the previous cycle. Look at the previous cycle. The Bitcoin doesn't do rational things all the time, right? The rational thing up here would be say, it needs to cool off and come into, didn't want to. It cooled off for 2 weeks here and it went off again on a bullet trade. So you got to understand, when you're trading crypto, yes, you can use technical analysis, but you also need to understand that crypto is a function of liquidity, right? Money in the system when the Fed cuts rates, which you spoke about yesterday, which worries me, which we covered off in yesterday's video. But it's also a function of hype and greed and momentum. When people are talking about crypto, when your neighbor's talking about it, and your barber's talking about it, and your Uber driver is talking about crypto, it won't follow technical analysis. It's just following people FOMOing in to jump into the asset class. Now, of course, to add to that, this year we've got the added FOMO of institutional buyers. It's not now just retail buyers FOMOing, it's institutional buyers who are FOMOing into the markets too. They want to get into this market. So we're going to see that start to take an impact as we head towards Bitcoin halving, as we head towards the rest of this year. More institutional money will flow into Bitcoin. And Bitcoin, when you just look at that chart, is in such a beautifully bullish situation here. When I look at this, having us been through this retracement here to the downside, falling all the way down to 15,500 and not panicking, DCAing, accumulating, how could you not be super bullish now that you've had insane moves? I mean, you take this from the lows, if you guys were watching the videos with us when we were DCAing at some of those lows, and you take it all the way to where we're at, 175% gain already. So a lot of people, market participants, are sitting now with Bitcoin at 43,000. They're feeling okay, right? Down here, when you're at 15,000, loads of people were looking at their portfolio 80% down, 90% down. Now, many people at least break even, if not slightly in the green to substantially in the green, depending on how much they DCA down here. The only people who be in the red, let's think about this, are those who FOMO'd in above 49,000. Anyone who bought between 49,000 and 69 and then continued to not DCA through the market, they're the only ones that are wrecked right now. So you can tell that decently medium to long-term holders will be in decent profits right now. They'll be feeling bullish about this market and they'll be ready for the next attack. They don't need to sell. They're sitting in a comfortable position. They won't be panicked. And that's really, really important. Now, of course, we can back that up with the fear and greed index. Look at the fear and greed index. Sitting here at 60, it's still in the greed territory. We've not had a substantial pullback here. And so when I switch over here to the monthly chart, this puts it into perspective even more. Look at that chart. Look at this bounce here. I mean, from this here, look at that beautiful extended move here on Bitcoin. Really, really powerful. And again, let's go back to previous cycles. 1, 2, 3, 4, 5, 6. 6 months of powerful green candles where all the gains were to be had. And if you missed out on this market over the last 3 months, you've missed a lot of the gains already. Now, fortunately, you may get a pullback. It may want to kind of cool off a little bit down towards some of these levels, maybe down to 35, 36. Like I said, even if it wants to come down to 32, fantastic. But you got to ask yourself, do you want to be in this market or do you want to sit on the outside and be a spectator? I know what I'm doing. My bags are locked. My bags are loaded. They have been for a very long time. I've been DCAing on pullbacks and I'll continue to DCA if we get more meaningful pullbacks. I'm also actively trading the markets. If you guys want to learn how to trade the markets, you can jump into our Telegram community, ijazcrypto.com/TG. The link is in description. Come learn how to trade with us in a sustainable way. I only do spot trades. I only do long trades. I'm not a degen. I just do nice, simple spot returns, which are consistent, which are profitable, and risk managed carefully in a pragmatic way. That's my style. If you want to learn from that, you can jump into a community, more than welcome, and learn how to trade. Sitting here on Bitcoin, the next focus of this week now, we're going to get a bunch of Fed officials speaking, okay? So if you look at the calendar, there's loads of Fed officials speaking all throughout this week. Fred Kulga, Fed Barking, they're just going to be talking bear. And when they talk, we know that they can move markets. So be very, very careful this week. Keep an eye on the dollar index, right? Dollar index has now had 5 weeks here to the upside. We don't want this dollar index to really get above its EMA ribbon, which it's doing now, right? We don't like that it's managed to try and get above its EMA ribbon. We need to send it back down quite quickly. Very important. This has to be in a downwards trend for Bitcoin to do well. So that's going to be really, really important. So there you have it, guys. That's where we're set here at the beginning of the week. Bitcoin forming a very, very important golden cross strategy. I'm super bullish about this market. Like, everything is stacking itself up very, very nicely. The only thing which I don't like, as I discussed in yesterday's video, is this whole narrative around the Fed flip-flopping. And that could cause a huge spanner in the works. Now, when I say spanner in the works, again, I'm not too concerned, because if medium to long term I'm bullish and I know eventually the Fed will have to cut their rates, then I want to be in the market. The question is, am I going to get another dip? Will the Fed delay their rate cuts and give me longer to buy the dips, send the market down a little bit more to give me further opportunity to buy the dip? If it does, fantastic. When we're buying Bitcoin in a post-spot ETF era at 40,000, 38,000, 39,000, I think in the longer term, that's going to prove itself to be an almighty steal. Thanks for watching, guys. If you appreciate these updates, smash all the likes. Don't forget to subscribe. Check out the links in the description to our Telegram community, and I'll see you in the next one.